Hey, Oracle, can you hear me? Oh man, I didn't even know that. Sorry about that, guys. All right. So, anyways, thanks for joining me. So, anyways, yeah, we got a full list of stuff to talk about today. Man, I've been having all these mic issues recently. But anyways, we got a lot of stuff to talk about these next couple of minutes. Primarily Liberation Day, right? Liberation Day was we're gonna have a huge steep drop, which I'm gonna be covering here in a minute. And I just want to put this out there that of course this is not a political channel. All right. We cover a lot of different topics. All right, guys. Politics and finance, they usually intersect. But let's leave the politics at the door and we'll just cover just the facts. Whether you love them or hate them, we have a president and the president's going to do what the president does. All right, so we're also going to cover a bunch of terms that are going to be coming out these next couple of days, which I'm sure of, because as you know, there's always a lot of fear mongering in the news and, sex sells. So we're going to be covering what words I predict we'll be hearing a lot of, or new articles that'll be coming out that we're going to hear a lot of. So anyways, without further ado, guys, let's just get into the news. All right, so this is the first one. Hopefully I don't have an echo in here. See, I think, do you guys still hear me? Because I had an echo in one of my last streams, so hopefully I don't have an echo now. But anyways, all right, so this is going to be the first one, the full list of U.S. tariff rates and the countries targeted. All right, U.S. President Donald Trump on Wednesday announced his long-awaited plans for new tariffs on a day he has dubbed Liberation Day. Trump said the U.S. would implement a minimum baseline 10% tariff on imports from all countries. All right, all countries, not just what was like, look where we started. We started with Canada and Mexico. Then it turned into this whole fentanyl thing. Then it turned into placing troops at the border. Then it evolved to include China. And then, it started evolving even more than that. And it started to include the EU. And now we just said, you know what, screw it. In for, what was it? In for an inch, in for a mile. Might as well just do the whole world. So now we just tariff the entire world. Okay. Some of the bigger countries, I was looking through this list earlier. Some of the bigger countries, they're getting their tariffs slashed in half, which is probably a good thing for them, instead of reciprocal tariffs, a 1-for-1. So hopefully we'll see how this pans out over the next couple of days, how traders take this, how institutions take this, and how investors take this, right? How investors are going to react to this sentiment. So there's going to be a flurry of news, I'm sure, coming out. Definitely a ton of pundits and analysts are going to come out saying what their thoughts are. Looking at this list, of course, our biggest trade partners are going to be affected the most, right? You have China, the European Union. I was actually surprised Vietnam is hitting us with a 90%, tariff. So, we're going to hit them with half of that. Taiwan, Japan, India, of course. But I saw some news that India is actually going to drop their tariffs to 0. I don't know if that's already happened or if this is just, they already printed the cards out, so they weren't going to change it. So going to see what comes of that. I was actually surprised to see Thailand has a 72% tariff on the United States. But yeah, this list is really interesting. I know I saw something for Israel saying they lifted all their tariffs, so they wouldn't get tariffs back. So I'm sure this will change right here. And again, just going down the list, Norway, we have Jordan, which I'm surprised about. Let's see who else in here. Madagascar, 93% tariffs on us, right? So we're going to hit them with 47. And then Myanmar, which just got hit with an earthquake, they're going to be they were hitting us with 88% and we're going to hit them with a 44. So a lot of these countries that have higher tariff limits on the United States, they're going to get discounted rates. So about a 50% discount, which is, that kindness narrative that Donald Trump had mentioned in one of his press conferences. So again, we're going to just take a wait and see approach and see how other people are going to handle this, how other traders are going to handle this, how other investors are going to handle this. Because right now, the fear and greed index, which I'll cover here in just a moment, is very, very low or high, however you want to look at it. It's not looking good. Real quick, OpenAI surges in users. Valuation likely to benefit Microsoft, who's one of their biggest partners and biggest investors. So I'm just going to cover this at a high level. All right. The recent gains in OpenAI's user base and valuation after its last funding round are likely to boon for Microsoft, which has a significant stake in ChatGPT maker. Jeffrey said, "Hey, James, what's up, man? Had to take a break from social media for a bit. Oh, hey, I appreciate that, man. Yeah, thank you. Yeah, I covered it in one of my streams about the Thailand stuff. So, but thank you for checking in on me, and glad to hear you're good as well. We believe the surge in ChatGPT users OpenAI's new funding round benefit Microsoft, given the surge boosts OpenAI's growth, compute needs, and valuation of which Microsoft has a revenue share, cloud provider, and ownership stake. Analyst Brent Thill wrote in a note to his clients. Thill has a buy rating for $500. I don't even know who Brent Thill is, just so you guys know. OpenAI disclosed this week that it now has 500 million users who use ChatGPT every week, up from 400 million in February. As such, that likely means surging ChatGPT growth and revenue growth for OpenAI. They'll added media reports this week indicated that OpenAI is likely generating at least $415 million in revenue per month, up from at least $333 million last month. All right, so I didn't know this, that Microsoft is actually going to be using ChatGPT for their Copilot AI. Like if you're on a Windows 10 based, workstation or operating system for your laptop or desktop, Microsoft has this thing called 365 Copilot, and they're going to be putting in ChatGPT features like researcher, which is really, really cool. All right. And I'm going to show you that the reasoning features is part of the whole new agentic AI, and for AI to be able to, basically not just be a chatbot, right? That's really it. This was some of the newest, like the newer features. So there's this deep research with ChatGPT, right? And I do pay for the pro version, but there is a deep research thing that's really, really cool. And I use it a couple of times to do my own research for, kind of the stock market and deep diving into stocks. But basically what this will do, instead of it just being a chat prompt that'll just spit out a bunch of, kind of like surface level, scratch level type of information, what this will do now is actually deep research, look and provide you almost like a college written paper, right? It's gonna provide you the links. It's gonna have its own assumptions. It's gonna bring you like actual reasoning and why it thinks that. I think that was really, really cool. Because compared to the regular prompt, if you put a prompt in here, 10 best stocks for 2025, it's just going to spit out something from, combined from a couple different articles. And sometimes those stocks are trash, right? They're just really not that good. But when you click on the deep research and then you put in that same prompt, what are the 10 best, companies for 2025? It's going to spit out a whole bunch of like research and where it's pulling the information from and why it thinks based on the information that it thinks these stocks are going to do well, right? And not only that, it'll also include, bits and pieces of, like actual reasoning, like why these can outperform, right? Why these can outperform under the current, climate, under the current conditions. So I think this is really, really, really cool. So also, the reason why I think a lot of people were, buying up ChatGPT and getting into ChatGPT right now is because of the Studio Ghibli thing. Like I had a chance to mess with it myself and just kind of upload a picture of myself and just see what the animation would look like. But apparently this made a huge wave for ChatGPT, and a lot of people were flocking to ChatGPT to try it out. And I think ChatGPT came out and said, or OpenAI came out and said basically that a lot of their chips were overheating and melting and things like that because there were so many requests for animation, right? For the Studio Ghibli photo remakes. So, you have, Sam Altman right here with the ChatGPT logo on the back. You have a couple of pictures here. Some of these are, if you remember, way back, last year, a lot of these memes. This is the one with the guy and the girl, he's looking at the other chick. This is the girl who, like, the house is burning and she's just got this really like mellow look, like an evil look. And then you have the guy from Turkey who didn't need all this fancy gear and he's just shooting a pistol. So, I mean, the animation's really, really cool. But I think this, in combination with that deep research that I was talking about, really upped the game for ChatGPT. It's becoming a better model, and I'm starting to really like it. I tried, like I said, I tried the deep research a couple of times to do my own research on stocks, on the economy, on, actually, I did do something for what could happen after the tariffs, right? And it gave me 3 answers with an evidence-based approach. So it gave me 3 answers, 3 scenarios based on what could happen, best case, worst case, neutral. And it, included, what happens with the GDP? Is it a potential recession? We head into a bear market? And then it gave you an evidence-based approach, which I thought was really, really cool. Shannon asks, you getting margin called tomorrow? I hope not. I know the market is down half. Oh yeah, we're going to cover that. We're going to cover that and more. All right. But anyways, yeah, continuing on. Yeah, the whole ChatGPT thing, really, really, really cool. Just want to cover Tesla real fast because, I covered it on this channel a couple of times. Tesla deliveries plunged in Q1 amid the Model Y changeover and Elon Musk backlash. So you guys already know that Elon's been running Doge and Tesla's been basically taking all the heat for that, right? You have vandalism, you have people placing, incendiary devices at Tesla dealerships. You have dealerships getting protesting or protesters out front. All this crazy stuff, right? Over Tesla. You have Teslas being vandalized. And it's just ridiculous in my personal opinion. Whether you love or hate, Elon, to actually take it out on other owners who just own the product is kind of stupid in my personal opinion. All right. And I know I just said that I wouldn't include politics in this, so I apologize. But anyways, all right. Tesla reported 336,000 deliveries for Q1 to fall short of the consensus estimate for a tally of 377,000 vehicles. The electric vehicle maker said it produced 362,000 vehicles during the quarter. I mean, that's a lot. I mean, not gonna lie, I don't know why that would fall short, but whatever. Tesla said 4% of the deliveries total was subject to the operating lease accounting. Model 3Y, which is their new vehicle that they're rolling out, it's going to have all their latest features, and this is really what's been driving down their production, right? Their deliveries is because they have to move all their factories to the new Model 3Y. There is a viewer on this channel. It's a Wealthy Life, so shout out to him. He did mention that. That the deliveries are going to be slumping this quarter because all the Tesla factories were having to move to this new manufactured model. So shout out to him. He's a Tesla bull. So, always glad to hear, when he's actually correct. Overall, the quarterly deliveries tally was the lowest for Tesla since 2022. And this is obviously reflecting in the stock price. Right. While the changeover of Model Y lines across all 4 of our factories led to the loss of several weeks of production in Q1, the ramp up of the new Model Y continues to go well, highlighted the company. So hopefully they'll be able to turn this around. And I did see an article saying that, Elon Musk was going to step away from Doge at some point, hopefully this year, and get back into the company and shut his mouth. So hopefully we could see, for any Tesla holders out there, a rebound for the stock. Again, Tesla does have a lot going for it. They're innovating in robotics. They got all this stuff. They got robotics. They got the self-driving cars, which they're doing in Austin, Texas. And now they have their new Model Y. They still have their whole battery technology. They have their own AI, their own data center that they have. They're not leasing this stuff. So they got a lot going for them. And it's going to just be interesting to see what, Tesla has for the future for the remainder of this year. Their stock price dropped about 45, close to 50%, if I'm not mistaken, from all-time highs. And they've just kind of been steeping up, right? They've been coming back. I think a lot of people are buying now that the stock has been depressed so much. But with today's recent news, we're going to cover it in just a second. But with today's recent news, who knows what's going to happen. All right, real quick regarding NVIDIA. Chinese tech giant scampered to order $16 billion of NVIDIA AI chips as U.S. curb looms. All right, Chinese tech giants, including Alibaba, Tencent, ByteDance, placed at least $16 billion in orders for NVIDIA's H20 server chips used for AI in the first 3 months of 2025, ahead of a potential U.S. ban on the sale of AI chips into China. The information reported, citing people familiar with the transactions. So, again, Chinese companies are very reliant. They really want to buy NVIDIA chips. This is why I'm still very bullish on NVIDIA. Yes, that is a potential headwind that the curb can happen because the United States still wants to maintain its AI dominance in the AI space. So they're going to do what they have to in order to make sure that they maintain that dominance. And one of those, or part of that plan is to curb any chips going to China, right? China is going to be the biggest competitor in that space, in that sector. That's no doubt. There's no doubt. Now, I did make a comment in an earlier video saying that, I don't believe anything that comes out of China, especially when it comes to, their reports. You have Ant Group and Alibaba that are owned by Jack Ma. And not only that, the Chinese Communist Party has a piece in both of those companies, right? Whether it's public or not, they definitely do. Huawei Technologies, which is a networking company similar to like a Cisco or maybe like a Broadcom, they load all of their technology. Doesn't matter what it is. Could be a cell phone, could be a Wi-Fi hotspot. They load all of their technology with tracking software or tracking chips. All these chips, all the software sends all this information off to China. All right. And China just collects data daily. Their BYD cars definitely sending data off to China. So whenever it comes to news about Chinese companies and China and, dominating the United States and beating them out and doing things, for cheaper and for less, I always take that stuff with a grain of salt. I don't know why. I just don't believe anything that comes out of China. It is definitely a bias I have. It's one I should definitely be careful of because, again, yes, the Chinese, they have all these, at least in my opinion, they have all these things that are wrong, but they do a lot of things that are right as well. But I would never bet against America, if I had to choose between the two, Chinese companies or United States. United States, they are, we are. The United States, we are the most innovative country in the world. You cannot export innovation, right? Your people come up with innovation. China copies a lot of the United States. So that is why I think, Chinese companies, China dominance in the AI space is not going to happen. They copy a lot of what the United States does. So anyways, with that little rant over, the orders would potentially benefit NVIDIA, but only if it can deliver the chips in advance to before the new curbs. NVIDIA generated $17 billion in sales from China in the fiscal year of 25, ending in January 26. In February, it was reported that Tencent, Alibaba, ByteDance had significantly increased orders of the H20 chips amid rising demand for DeepSeek's low-cost AI models. So one point about this. So Jensen Huang, CEO and founder of NVIDIA, he mentioned, I believe at GTC, that just because, or that these low-cost AI models, like they're not going to be a threat to American AI, because as American AI becomes more intensive, it's going to require more compute power. There's no doubt about it. As agentic AI and, all these AIs continue to evolve, and they're, going to be able to do more reasoning, more, deductive reasoning, things like that. They're going to need more compute power. They're going to need it, period. So these low cost AI models, while they're cheaper to make, it doesn't mean that they're going to be better. All right. I think we've learned that before, that cheaper doesn't mean it's better. All right. So yeah, enough about that. The H20 chips are slower in performance than NVIDIA's new Blackwell chips, which the company sells in most markets outside of China. However, NVIDIA recently upgraded the H20 by combining it with the same powerful HBM chips it uses for the Blackwell system. The report added, citing people with the knowledge of the order. Many Chinese companies have ordered the upgraded version, which strengthens the performance of or for training and running AI, according to the report. The Trump administration has been thinking of banning the sale of H20 chips to China, further restricting the country's technological rise. The fear of a potential ban prompted these companies to increase their orders in recent weeks. So if they're going to even meet these orders is left to be seen. The article basically explains that if these orders get canceled because of, the Trump administration, then these companies will just get refunded. So this was an interesting point. NVIDIA also faces challenges from local giant Huawei Technologies in the China chip market. Last month, NVIDIA CEO Jensen Huang talked about Huawei, which has seen a resurgence in its smartphone and AI chip development business. Huawei is the single most formidable technology company in China, Huang had said. He noted that the U.S.-led efforts to restrict Huawei had been done poorly, given Huawei's continued success. I think that their presence in AI is growing every single year, said Huang. We can't assume that they are not going to be a factor. All right. So again, when we're talking about the dominance in the space, when you have a CEO who owns one of the largest companies in the space telling you, the president, that Huawei is going to be, a rival company, and we have to do more. The U.S. administration has to do more to curb that. We'll see what happens. So I really think that chip order is not going to be met. In all honesty. Okay, so now onto the juicy news. After Donald Trump had talked about all of his tariffs, right? Liberating America, after he talked about all of this and showed everybody all of this. I watched that entire speech. It was, I think, like 30-ish minutes long, but yeah, I watched the entire speech. He's going through all these cards and everything. So this is what we're left with. Dow futures tumble 1,000 points on fear of Trump's tariffs will spark a trade war. This happened after the 4:30 speech. All right. So U.S. stocks futures cratered, as President Donald Trump unveiled sweeping tariffs of at least 10% and even higher for some countries, raising the risk of global trade war that hits the already sputtering U.S. economy. Futures tied to the Dow Industrial Average lost 1,069 points, or 2.5%. The S&P futures dropped 3.6%. NASDAQ futures dropped 4.5%. The White House unveiled a baseline tariff of 10% on all countries that goes into effect April 5th. Even bigger duties against countries that levy higher rates on the U.S. will be charged in the coming days. All right. The S&P 500 rose for the third day Wednesday on hopes Trump would not announce a severe tariff plan on the risk it would tip the economy into a slowdown and raise already sticky inflation. The benchmark has been hit hard since late February, with it falling into correction territory or 10% down from its record. All right. So real fast, let's just look at the pre-market. I'm going to skip these two for now. I'll come back to them, but let's look at the pre-market. Okay. All right. It looks like it changed. Actually, it looked like it changed a little bit, but yeah, you can see right here, guys. Let me see if I can make this a little bigger for you guys. So you guys can see right there, the index, the S&P 500 is right now down 2.91% after market, right? NASDAQ is down 3.56 after market. All right. These are the futures. So we're going to see what happens tomorrow. These could rise overnight. Again, hopefully they do. But, I was kind of thinking something like this would happen, that these indexes were going to fall, right? We were pumping for 3 days on really, really pessimistic, uncertain, and doubt news. And, then all of a sudden, here comes the tariffs. And I was like, yep, I know this is going to be a pump right before the dump. So I'm sure there's probably hundreds of people out there who put in a lot of puts on companies. But yeah, I can probably see this getting worse tomorrow. We're probably going to go down really, really hard tomorrow. It will be a very bloody day. There was a couple analysts, I think one from Wedbush Securities, if I'm not mistaken, or it might have been some other pundit that I watched on YouTube. He's predicting the S&P 500 will drop to 5,500 and then rebound from there. Of course, you take that with a grain of salt. NASDAQ, same thing, about 19,000. So we will see what's going to happen tomorrow. This is a wild time, guys. All right, real fast. This is the VIX, the volatility index, right? You see this spike. You see this spike right here. Boom. The spike happened. The meeting started. You guys can see the kind of this timestamps down here. But yeah, then the meeting started and the VIX went crazy. All right. So this is a very volatile time, and it's going to continue being a volatile time, right? If we look at the 1 month or the 1 week, you guys can see it right here. It's just been crazy. Absolutely crazy. We look at the month, absolutely crazy. All right. And it's going to continue being crazy well into April, I predict. And I don't think we'll have any type of like stability until May timeframe. June is expected that the Federal Reserve will do another cut. So got to wait and see then. All right. So there's definitely going to be some deep red days. Have that cash ready, right? Have that cash ready. Take advantage of those opportunities as you see them. You could sit on the sidelines. You could move to bonds. You could do all that safe type of stuff. Entirely up to you. For me, I'm sitting on about $20,000 worth of cash, and I'm going to deploy that into probably a position or two whenever I see a better opportunity. So fear and greed index. All right. This is from CNN. we're extreme fear. I don't think I've seen it drop to 17 since I've been covering the fear and greed index. So this is obviously really, really bad. It's probably going to drop even more tomorrow morning, but I just wanted to share that with you guys, not to stoke the flames of fear here. All right, so a couple keywords I think people are gonna start hearing in these coming days, right? I just want to share this with you. You know, history doesn't repeat itself, but it rhymes. And usually when these really bad market days happen, I looked back at the news articles from 2018, from August 2018 to about December of 2018. And the news was just super, super negative. This was when the China trade war was happening with the United States. So same exact or similar scenario. Market dropped heavy. I think it dropped about 10%, if not a little bit more. And there's all this talk of recession, all this talk of stagflation, all this talk of, you know, we're gonna, you know, GDP is gonna drop, and, you know, jobs are, you know, jobless claims are gonna pile up. All the same news that we're reading today was the same news that we heard back in 2018, right? So again, history doesn't repeat itself, but it rhymes. So I was just looking at a lot of those news articles, and I saw the same exact words that we're seeing today: stagflation, recession, and friggin' bear market. Like, these are the same exact words that we keep hearing over and over and over again. And it's just a point, all right? It's just a point that I want to put out there. Again, I'll have all these links. Excuse me. I have all these links to these articles in the description below after the conclusion of this stream. But yeah, like, it's the same exact stuff. And you know, if you want to at least understand how to position yourself, how to position your portfolio, read through these articles so at least you have an idea. But yeah, expect just a flurry of articles covering these words coming out in the next couple of days, right? I'm not going to say it's doom and gloom, and, you know, not to take them seriously, or at least, you know, not to take it with a grain of salt, you know, but again, it's always the same. It's always the same circus every single time crap like this happens. It's always the same thing. So anyways, I just wanted to put that out there. So actually, let me go back here. So there was it the bear market? I think so. Yes. So key takeaways for a bear market, if we do head into a bear market, right? Bear markets occur when prices in the market decline by 20% or more, often accompanied by negative investor sentiment and a weakening economy. We already know investors are very pessimistic right now. Bear market can be cyclical or longer term. Short selling, put options, and inverse ETFs are some ways that investors can make money during a bull market, or during a bear market, excuse me. So I just want to at least show you guys this. I'm sure there's probably other fund managers out there that have something similar. I know yieldmax came out with a bunch of stuff as well, but I just want to at least show you guys this so you've seen this, because I didn't even know these existed up until recently. I never really looked at them. I've heard about them, but I never really like actually used them in any way, shape, or form. So I just wanted to show you guys this. So this is from Direction, and they basically offer leveraged and inverse ETFs. Now, these leverage and inverse ETFs, they can be extremely dangerous. So you have to be careful, and you have to be sure. You're betting on something going up, either 2x, or excuse me, you're betting on something going up or going down. And then what Direction will do is they'll offer a leveraged ETF for that, right? 2x leverage or even 3x levered. So when they do that, they're basically piling on debt. So you can really wreck your portfolio if you go in the wrong direction. Okay, instead of losing 10%, you could lose 30%. Instead of gaining 10%, you could gain 30%, right? Just as a quick, you know, example. But, you know, they have a lot of tickers in here. They have, you know, Berkshire Hathaway, they have Google, they have Eli Lilly, Meta, Microsoft, Micron Technologies, Netflix, NVIDIA, you know, and they're not really meant to be held, at least from what I've gathered. They're not really meant to be held long term. Like, these are not going to be, you know, 1 year, 2 year type of holds. These are going to be really short term holdings, right? Really short term holdings. So if you want to try to make a bet, and I don't recommend this at all, but if you wanted to know how to make money during a bear market, I would at least look at some of these, right? TSLL, when Tesla was taking a dump, you know, this would have probably been really, really good. TSLS, I'm guessing here, right? But this would have been something worth looking at. You have TSM, Taiwan Semiconductors. one I have really been looking at, and it's piqued my interest. And again, they have some for the S&P 500. They have some for QQQ. Again, you guys can take a look at this stuff. Again, I'll put a link down below in the description for you guys at the conclusion of this stream. But one I really thought was really cool, and I'm waiting to find it, is Soxl. Soxl and SOXS. So these are the semiconductor bull and bear shares at 3x leverage, which is kind of crazy, right? I'm not going to say I'm going to open a position now or not, but it's just something I've been really looking at because I do believe in semiconductors, right? I do believe in the semiconductor companies that these hold, because they have companies like, we'll just take a look. They have like NVIDIA, they have Broadcom, they have, will this click? Okay, I don't know what's going on. There we go. All right, they have Broadcom, they have NVIDIA, they have all these other semiconductor companies, right? AMD's in here, Qualcomm, Texas Instruments, Marvell. I don't think I've ever heard of Lam Research, Analog Devices, right? So they have all the big names in these semiconductors. If you're really bullish, really bullish on semiconductors, and you think we probably reached the bottom and it's just clear blue green skies from here, then you could go with something like a Soxl, right? But if you think there's further pain ahead and you want to bet against semiconductors because they're going to be hit the hardest, you can go with something like SOXS, right? So I just thought that was really cool. Reading through this, short selling doing put options or inverse ETFs are some ways investors can still make money in a down market. All right, of course, I don't know personally how to do all the put option stuff. It is something I'm still like dabbling in, but it could be worthwhile, right? If you want to just make some additional income during this time. So we have two things coming up. The initial jobless claims, which is going to be coming out tomorrow, your guys' time Eastern Standard, and then Friday, April 4th, will be Jerome Powell speaking. So I'm really, excited for that one because I want to hear what his thoughts are. So I'm going to try to catch that. If not, then what I'll do is, just kind of read the article or watch a YouTube replay of it or some sort. But yeah, I'm really excited for this one. I'm going to keep my eyes on this one for sure. But we have the initial jobless claims coming in. This is what we're expecting. Yes, this is what we're expecting. And then U.S. employment report, 140,000 jobs, and then unemployment rate, right? Again, between 4 and 5%, if I'm not mistaken, is, quote unquote, healthy for an economy. So we'll see if this rises as time goes on, because not only are we thinking like, with this whole, tariff situation, jobs potentially being lost. I don't know how. Don't ask me how the economics works there, because Trump, during his speech, was saying that he's trying to force production in the United States. So by forcing companies to move their production into the United States, that would create more jobs, which would be a good thing, right? Which would be a tailwind for the United States versus a headwind where we're outsourcing all of our stuff, all of our manufacturing to these other countries. So, gonna just wait and see. Again, I don't think this data is really gonna reflect immediately, over the next couple of months, because you still have the Fed workforce that got cut, but they took a severance package that basically allowed them time up until about September. So they were going to still get paid by the federal government. They'll still be able to collect all their benefits up until September, right? And a lot of people took that out, but that gives them up until September to find new employment. So they're going to go to the private sector. So, again, I think long term we'll see what the numbers play, but I think that will play a piece in this. Like, we're not going to see the unemployment rate spike because of how that was played, of how the federal workforce getting cut was played, which, looking in hindsight is actually really smart. So, all right, guys, we're going to go through the market news and then we'll do portfolio updates. Let me just take a quick look at the comments. So yeah, James says he's ready for some deep red days. Hell yeah. Got margin, Jacob Tower fully configured. Yep, absolutely, man. Be careful. Please be careful. All right. Debt, margin, loaded gun. Be careful who you're pointing that at. Shannon says, I'm losing enough money on just investing. I don't need to add, he's referencing the inverse ETFs. Don't need to add those, but I like watching other people's journeys with leverage. You know, that's journey through leverage. Maybe that should just be a series, you know, a journey through leverage. I like it. All right, cool. Let's see what else we got. Let's take a look at the poll. So started a poll at the beginning of the stream, and the poll was, are you tired of winning? All right. 20% of you said yes. 40% of you said no. And then 40% of you said, I'm ready to start losing. And I'm going to be with the 40% I'm ready to start losing, because portfolio has been getting hammered, has been absolutely getting hammered. So glad we got that out of the way. All right, real quick, let's just end this or get through this segment, and we'll hit the portfolios. All right, so S&P 500, we are up 67 basis points. But again, with that, looking at the futures, way back here, where is it? Looking at the futures, look, it already spiked up a bit. Looking at the futures, I think tomorrow we're going to have one hell of a bad day. All right, NASDAQ up 75 basis points. Bitcoin, man, Bitcoin got hit the hardest out of everybody. Bitcoin got hit the hardest. Okay. They were at almost $88,000 a coin, and now they slumped 6% down to $82,000 a coin. That is a huge, huge drop. I don't know if this is all due to the tariff stuff. Maybe it is. Maybe it's the start of winter. I have no idea, but yeah, this is that, you know, I'd hate buying at the top and then for that dip. And who knows if it's going to dip even more after tomorrow. I mean, Bitcoin trades 24/7. So, looks like it already kind of rebounded. So, all right, the more you know. Gold, again, best performing asset year to date, almost up 20%. And there are inverse gold, or not inverse gold, there's bull share gold or 3x levered gold ETFs out there. I don't know what the tax situation would be if you were to sell that, because if you were to buy like a gold ETF like GLD, there are special tax consequences that come with that ETF. I've seen things like, you know, it's counted as a collectible. I've seen it count as, if you sell it, it's not taxed as capital gains. It's actually taxed as something else. So of course, do your own research. I'm not a tax professional, but you know, again, I think that's still really interesting. This is telling us right now that investors are very worried about the future. They're very scared. They're flocking to safer assets like gold. All right. And hopefully real estate, but real estate, Vanguard Real Estate Index ETF, V&Q is up 61 basis points. The 10-year Treasury, which we use as a barometer, has dropped substantially. A lot of people are moving to Treasuries and moving to bonds. So this is actually starting to put the yield lower, which is thank God, thankfully. I'm hoping some of the real estate projects I do have will get cashed out in the future, or cash out refied. So hopefully we can get that. Let's see. Certified Freak says, still waiting for higher highs and higher lows to turn the Marge machine on. That's what I'm talking about. Let's marge to the tits. Okay, anyways. Enough of that. Okay, Vanguard, we already covered this, so we are good here. Let's take a look at the portfolio, and I'm just going to go over some small little trades I did, or some buys that I did, and I'm, again, holding a lot of cash. So, well, a lot of margin, I suppose. All right, so I hope you guys can see that. Let's see. All right, you guys should be able to see that. Okay, so I did open just kind of a meme position. I don't know if you guys heard about Newsmax, but Newsmax jumped like I think 1,500% or something over the last couple of days, and it finally came down to earth. You know, Newsmax is a conservative news publication, and they just had their IPO, and they went crazy. CoreWeave, which I've covered on this channel before, they actually, despite all the negative news, they've actually been pumping. And I don't hate myself for not getting into them or getting into CoreWeave, but I still think there's going to be a lot of pain ahead for this company, right? The shares came out at $40 and now they're up $55, so 30% gain in a matter of like a couple of days. Not bad, not bad. Again, CoreWeave is a data center that offers only GPUs, right? They used to be an Ethereum miner, and then they kind of pivoted and switched their business model to now, you know, basically being in the AI space, providing compute space and, you know, GPU power. So they're a NVIDIA-backed company. NVIDIA bought a ton of shares in order for CoreWeave to IPO, right? So that was a red flag for me. The founders, they sold a bunch of shares prior to IPOing, I think last year or late last year. So again, that was a red flag to me. They're very CapEx heavy, which I don't really count as a red flag. I mean, data centers are notorious for being CapEx heavy, despite, I mean, even being real estate companies like DLR, which is Digital Realty Trust, or Equinix, ticker EQIX. Even these two REITs are very CapEx heavy, right? They have to buy new hardware. They have to, install new hardware. They have to hire the engineers in order to manage these server racks and these buildings. So I'm not surprised by the CapEx. I don't know why people are, but I don't know. It's just my two thoughts. CoreWeave, we'll see what happens. Kathy Woods did open a position in CoreWeave. I don't know how many shares she bought specifically, but she did buy some. All right. So for me, I opened just like I said, a meme position in Ondas. If this thing goes up $1, then I'll make $1 on every share, right? Almost every share. So I just put $1,000 in there. So if it goes up to $10, then great. If not, oh well. But Ondas Holdings is they have two different holdings. They have Ondas Automated Systems, which is their drone technology. It's more geared towards like the defense and security sector. And then you have Ondas Networks, which is commercially available software based, basically like networks, radio frequencies, that type of stuff for mission critical assets. So that's what Ondas does. And Palantir teamed up with Ondas for OAS, their Ondas Automated Systems. And now their drone technology can integrate with Palantir. Now, you would think that that is really cool and that's exciting, that the stock is going to skyrocket to the moon. But I mean, when you look under the hood, it's no different than like an Android phone being able to run Microsoft Word. Like, it's nothing super sexy. It's nothing super exciting, but give Ondas a little time and maybe it'll mature and they'll offer better products. So I'm just throwing some, play money in there and just going to see how it runs. PLTW, I bought some shares of additional shares of PLTW during yesterday's dip prior to the shares bouncing up. So I bought some additional shares of PLTW, some additional shares of NVW. XPay and XDte, I still hold these two. I did sell out of my Ethereum cover call ETF. For XPay and XDte, I'm holding the cash and I'm kind of deciding if I want to just drop this into XDte and XPay or just XDTE by itself and call it a day. I haven't quite decided yet. I want to see what else is out there. I really was hoping Kurv would have had something worthwhile because they did say they were coming out with some new products. I haven't seen any news on it since, but I was really hoping they were going to come out with something for NVIDIA, but they never did. So that's why I went with Roundhill's NVW. And yeah, so again, gonna wait. It has to be an income-focused ETF. So if anyone has any recommendations, please drop it in the chat. I'm always open to doing a little more research on stuff and learning something else. I did look at the IYRI from Neos, I think. But it's basically a real estate cover call ETF. I do like the holdings. That is probably the top contender so far, but I don't want to open a position in it right now. So, but yeah, this is the portfolio sitting on a lot of margin still, still low risk, still doing well. Not worried about getting a margin called, not worried about getting a margin called because again, this was stacked correctly. Again, shout out to Oracle ETFs. He's the one who basically showed me or showed a lot of us how to do this correctly without imploding your portfolio. So I didn't filter by highest yield and then purchase, 100% maintenance required, shares and then, try to margin stack that way. Instead, what I did was wait a little while, learn the process, learn the framework, and then made my purchases. But, if people want to explore, this methodology, just make sure you start with something that's low maintenance. This has to be bought in cash. All right. Do not buy this, beginning with margin. Like if this is 100%, do not start with this. Is what I'm trying to say. Do not start with this if this is extremely high because you're going to blow up your portfolio. Start with something low and then take margin against that. Okay. If you have to sell out of it, be very careful how you sell because again, you can blow your portfolio up and you will end up selling a lot more shares because that brokerage is probably going to want their money. So just be very, very careful on how you implement margin. So I will end that piece and then we are going to look at the REIT portfolio. Hopefully this is logged in. So the REIT portfolio has actually been doing very well despite all of the craziness that's been happening in the markets. Let's see. I hope you guys can see that. I think that should be good. Yep. So still setting pretty, as REITs, you know, or I should say as technology or the broader market zags, REITs seem to be zigging. So really excited about that. I really think with the 10-year treasury going down the way it is, REITs are going to have a freaking strong rebound. And I'm so excited that, you know, I bought basically during a 3-year bear market for REITs. So I'm really excited. Hope that the shares bounce back. This portfolio is going to do very well. It's sitting basically, well, not anymore, but it was sitting neutral for a second, you know, as it was basically sitting flat, right? Because VGT was losing as much money as REITs were gaining. But, you know, obviously with the huge sell-off, VGTs, I'm going to really feel this tomorrow. It's like coming out of the gym. You're really going to feel this tomorrow. Nothing exciting in BDC land, nothing exciting in the crypto ETF land. I did think about, you know, like if I'm going to do anything with like Ethereum, it's just going to be an Ethereum ETF, but that was probably it. Nothing exciting there. So that's it for the income portfolio. I do know that there were some people that were asking about the real estate syndication stuff. I want to do a video on it. I do want to do a video on it, or maybe a live. But the problem with real estate syndications is I have to look at old real estate syndication documents, basically an offering memorandum, and I don't want to use the ones that I have. So I'm trying to look for ones that have already passed. Maybe they're like 3 to 6 months past the closing date, and then just go over a real estate syndication and show you guys what that's all about, right? Because real estate syndications, basically it's passive investing into commercial projects. So commercial projects like apartments, industrial, flex space, retail, mobile home parks, self-storage. So this is actually a direct investment in that, right? You're known as a limited partner, so you'll be able to collect all those tax benefits. When you invest in REITs, you're indirectly owning or investing into real estate. You're investing in the REIT that owns the real estate, but you don't get any of the tax benefits. You get zero. The REIT gets all of them, but you get zero. Whereas if you invest into a real estate syndication, you get all the tax benefits that come with that. So I do want to do a video on that. I know it is exciting. It gets a lot of people kind of, excited about stuff like that. So I will cover it at some point in the future, either on this stream or in a video for you guys. So other than that, I think that's going to do it for me. I'm at the top of the hour. I hope you guys have a good day tomorrow. Please make sure you guys don't jump out of the window like these Wall Street guys did way back when. Just know that the markets will recover. All right. Markets will recover. The stock market is designed to just go up. All right. I hate to say that. I hate to be that guy that says that. I'm sure there's people that disagree vehemently with that statement. But again, I can't see the stock market staying down for, years on end, years and years and years and years, and designed to go to zero. Like, I don't think that is what is going to happen at all. But again, thank you guys for joining me for the stream. Hope you guys got a lot of value from it. Hope you guys enjoyed it. Again, you guys have a great evening wherever you're at in the world, and I will see you guys in the next stream. You guys take care.